So sir, in this video I'll be talking about risk management. So I sent the previous video explaining how risk management works. Now in this video I'm just going to show you how risk management can be applied in trading. So I'm just going to do a bit of back testing so that you just understand how you're going to use risk management. So back testing, this is just trading. This will just be trading a chart in previous market data. So backtesting you just be trying to like trade, but not really with a moving chart. So it is just like if you have a strategy and you want to know if it works, you backtest that strategy. Like you go back in the previous markets data to see when the strategy worked, or how many times the certain strategy actually worked, in order for you to come up with the win rate of the strategy. So I'll just dive in so that I don't waste much of your time. So I'm just going to try to use a moving average breakout, a trend line breakout strategy to demonstrate the same risk management. So let's say you start here. So let's say you draw your trend line here. So let's say you're going to enter. Let me just adjust the colors on these trend lines for better viewing on your part. Okay, so that black trend line. So let's say just put up a few lines. So let's say that red line, let's say that's your stop loss. So whenever you enter a trade, the red line, this will be our stop loss. The blue line will be the entry point. This is where you're going to enter from. So just put the blue line to signify the entry, and the green line to signify or to show the take profit. Since I'm sure by now you're familiar with terms like the take profit and stop loss. Okay, so those three lines there, the red line will be the stop loss, the blue line will be the red line stop loss, blue line entry, green line take profit. So let's say you want to enter, let's say the market on this breakout which happened here. Since you saw the market was going and then it broke your trend line. So let's say you are entering a sale, you want to enter somewhere. You're going to enter, let's say somewhere within these points. Your stop loss will be above the trend line, above these levels here. So your stop loss will be above there, and your take profit will be somewhere below these levels. Or what you do is you use a risk to rewards ratio. So let's say when you want to enter, before you enter, you first see your entry point. So let's say if this line is your entry point, that line there, what you do is you get that to this two there. You come to this two here, you click on it. This what is a cross here too. This two is what we use to count pips. So just put it there, and then right click and then drag it, and then it will show you the amount of pips according to the distance you have dragged to. So from there to there. So here using a stop loss which is about 1 pip. The pips, this is you have seen there where it is the right, where it is says points. Sorry, what's wrong with this thing? There where it is saying points there, where it is saying where it is saying 15 points there. So that is not actually 15, that is 1.5 pips. So that is actually 1 pip. The last digit, that 5 there which you see in there, we don't count that 5 there. That is what we call a fraction of pip, like it is too small to be counted. So that's just a fraction pip. So that is 1 pip. The 5 you ignore it. So if your stop loss, if it is 1 pip, you want your take profit to be at least 2 pips, so that you have a good risk to reward ratio. So if you're using a 1:2 risk to reward ratio, your stop loss will be same way here where it says 20 there. So your take profit will be somewhere here if you're using such a mechanism. So then that would be how your trade will actually look like. It would be like your entry here, stop loss, take profits there. It's as simple as all that. So in this scenario, this was actually a winning trade. You'd have made 20 you'd have made 2 pips on this trade. So let's say now let me just now try to do this if this was in real time. So let's delete that. So let's say now you are now actually now trading. Let's say I think the market is closed by now, so I can't really show you on a moving chart. So let's say you draw your trend line there, you're just waiting for it to be broken. You're just waiting for it to be broken. When it breaks, you enter. Okay, good there, wonderful there. You have seen the market breaking our trend line. Here it has broken our trend line. So here we are going to enter. We are not going to hesitate because you have seen the requirements of us entering a trade. So your entry will be down there. You make sure to see how big your stop loss is before you enter, so that you know if you're comfortable to take such a risk, because you must risk at least 1% of your account, 3% maximum, or whatever makes you comfortable actually, because there are people who are comfortable risking 20% of the account, and some just 5%, some even just 1%. So you must only risk what you are comfortable with losing, so that's to put your emotions in check. So let's say you want to put your stop loss below on the other side of this trend line, and also below these levels of support and resistance. So I'll put my stop loss just below this week here, because this is also a good level of recent support, if you can see there. And so we're just going to measure how big this is. Okay, so this is about 1.6 pips. Okay, let me just make this to be 2 pips. Okay, just do this. So okay, so this stop loss is about 20 pips. So my stop loss is now 20 pips, 2 pips, sorry, which means my take profit must be 4 pips for me to have a good risk to reward ratio of about at least 1:2. But if you want, you can put 1:5. But the smaller the risk to reward ratio, the more trades you need to be correct on in order to actually make a sustainable profit from forex. That's how it works. So 4 pips is somewhere here. So this is 4 pips. So let's see how this market played out. Okay, boom. Okay, they are wonderful there. So if you can see, that was a perfect trade you would have taken there. You would have come out with 4 pips here, because here our take profit was hit very well, so it was a good trade to take there. So it was a good trade there. So simple. So here if you enter the trades here, it started moving there at this point here where this wick here came below. So at this point where the wick came where the market came below, this blue line here is all, and the wick was and here made the wick here. At this point you are like in negative, then it goes back in profit, and even just hit this green line, I'll take profit. Then we were out in the trade with a positive $4. On a situation where the market would have come lower than this and hit the red line here, would have been stopped out and they lost 2 pips, which means the account would have been negative 2 pips. But since we won this trade, it is now positive 4 pips. So let's go and check all the examples. So let's see what happens the next day. So the next day started here. So just one more thing. These dotted lines you are seeing here, these are what we call period separators. So this is a 1 hour time frame, which means the distance from here to here is equals to 1 day. So in this period here there are exactly 24 candles, which represents 1 hour, which is equals to 24 hours. So from here to here it is exactly 1 day. So these lines they signify the start of a new day. So let's see how this day went. Okay, so here we're not looking for trades yet. Okay, so let's say maybe at this point in time, so let's say we draw our trend line there. If the trend line, if it is broken to the downs, if it is broken, I'll be looking for sales to enter for a sell position. So let's see what happened. Okay, boom. Okay, it is broken there. So my entry somewhere just right when it broke my trend line there. So at least by this point here, I would have entered somewhere within this candle here. If you wait for the candle to close, mainly you are most likely to miss the trade. That is the safe thing to do. But since you have a stop loss in place, sometimes you should just be aggressive. Sorry, just give me that one. Oh shit. So sorry about that. So it would be something like your entry there, your stop loss above this and above these levels of structure. So at least above this candlestick here, and it's also in a good level of support and resistance there. So what you're going to do is to calculate this distance here. So we're going to calculate we're just going to see the distance between here and here. So the distance here is a perfect 2 pips there, so which means the take profit is going to be 4 pips, which is somewhere here. So our take profit is down there. So simple. So it will be a simple there 2 pips stop loss, 4 pips take profit. Simple. So let's see what happened there. So okay, the market went. Okay, take profit hits there. The take profit is hit, and what we see is after some time the market it comes back up. Have you seen? So the market here hits our take profit, just goes a bit below it and then goes back up. So which means if you had no take profit here, you'd have been in profit in this time, then the market would have come back and you are now be negative by now. But since you had the take profits in place, you are out of the trade, your 4 pips was safe, and you would have made money actually. Just simple as all that. So you can look for other trades. So look for there in the next day. So let's see what happens in the next day. So let's see what happens. Okay, I don't really see anywhere to put to like draw a trend line here. The market is kind of consolidating, so just wait for when to start trends like this. Okay, the market it is now trending there. You can see these red candles here. So in a smaller time frame, that's actually a downtrend. If you go check like on a 1 hour or like let's say on 15 minutes, 5 minutes, that's actually a downtrend down there. So just going to wait for the trend line there to break, then to enter. Okay, there it has broken. It has broken there, so now you can now enter the position. So you can enter somewhere like in this area, so within this candle. That's going to be our entry. The stop loss as usual below our trend line there, below our trend line, but also below the levels of structure. So to be somewhere in this zone here, because of this level of here which was here, the market tested here, also here, so in this area. So this is a good level to put my stop loss. Just so somewhere here, so just in this level here, so the level here, level there. So which means if the market goes back, to this point, it probably means that I am wrong on this trade, which means it is a losing trade. So this is the 1 pip, in fact 1.2 pips, so which means the take profits must be at least 2.4. But in this case whereby I can see that the stop loss is very minimal, I can even put a 1:3 risk to reward ratio. Okay, let me try to put a 6 pips, which is more than a 5, which is more than a 1:5. Since I can see this level of resistance support, this structure level, can be assured that the markets can come back up to that level. So let's see what happens. So this is like more of a 1:5. Let's see what happens. Okay, beautiful there. You see in this market it just comes here and it hits me out. So at this point, even if my take profit was even if the take profit was up here, it would have been hit. But let us not be greedy. That doesn't happen all the time. But this time I managed to come out with a 1:5 risk towards the ratio, which is good. So that's just all about it. So just put a stop loss, take profit. Just giving you a few examples. So I think you have gotten the point of this video. Yeah. So if you have any questions, simply just ask. You can just call me via my WhatsApp line. So that is I think that's it for this video. And the way you actually put a stop loss or take profit, I think okay, the way you do it is this. When you click that new order button here, when you click the new order, a window will pop up there where you're going to enter the trade from. There all the details they'll be where it says stop loss, take profit. So let's say you haven't yet entered the trade, you just put these lines here. Just put these 2 lines since you haven't yet entered, since you don't know how much you are going to risk. So like before you enter, like maybe like you like quickly draw these lines. That's why I recommend like let's say a 1 hour time frame for the same strategy which I'll teach you, so that you have enough time to do all these things. Because if you're using like let's say 5 minutes or 15 minutes, by the time you're doing this thing, the market would have already left you and you would have missed the trade. And you do not chase against the market. You don't chase against the market. Just like this breakout, if I find the market is already here, I don't enter. You don't enter. You have made the trade. You just wait for for the next trade. Okay, yeah, so what you do there where it says take profit stop loss, you just go to this number here. So this is the price of this certain thing. So what you do is you just go to this number here and you type this number there, and so that when the market reaches this price, it will trigger you out with a profit. And also put this price here so that when the market reaches this level here, to trigger you out. So as you have noticed here, stop loss is always lower than than your entry. But yes, than your entry. Take profit is always above your entry. And the thing is, so let's say if you entered by the time your stop loss reaches here, by the time the market reaches here, you can move your stop loss to here or to wherever you want actually. So you can move it. Okay, your stop loss must not be. It is never above the price. It's always below the price, and the take profit is above the price. That's all. So I think that's it for this video. That's all about risk management. So just use a good risk to reward ratio in trading. That's all. What I mean by that, just make sure that it's always your take profit is always bigger than your stop loss. So sir, I think that's it. I'll see you in the next video.